Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Today, I wanted to put a new buy recommendation. I talked about crude oil, but I'm not going to go there yet. Still watching, expect to get uh, the sentiment numbers tomorrow since it was a short week. So, going to put that off for a day or two. But I wanted to suggest looking at the REIT index, which has been a huge underperformer over the last few years. So with that, let's get into it. So this is the iShares US Real Estate ETF. The symbol's IYR. And I'm not recommending this because there's still a consolidation going on over here on the right-hand side, but you can see the potential inverse head and shoulders pattern. You can see these prices are still down. Almost looks like the small cap index, and there's a lot of small cap REITs out there, but you can see it's still down, uh, I don't know, 15% or so from its 2020 or late 2021 highs. So I think this is safe to buy. It's something I would buy, but that's not the recommendation today. If you want to play it safe and you want to buy a broad-based index on the REITs, I think this makes sense. But I have two specific recommendations tonight. And so the first is American Homes for Rent. And I'll let you do the research on that. Again, as a market technician, I want to look at these charts without a name, without us. I don't want to have any biases. I don't want people rationalizing to me why this is going to go up. I just want to look at the chart. And if I see a chart that looks good, I'm going to buy it. If it's a chart that looks bad, I'm going to short it. So if it's a chart in a trading range, I'm going to be neutral on it. So American Homes for Rent. And you can see it's been consolidating going back to the middle of 2022. And you got kind of a right shoulder heavy inverse head and shoulders pattern. You also have the potential triangle consolidation here, but you can see this consolidation. What's more important than what the figure is or what the pattern is that this consolidation is getting wound tight. And so the bulls and the bears are battling this out. And when it's resolved, it will go move fast. So it looks like last week we got a slight breakout on this. Again, I'm not recommending it based on that because you can see I like breakouts on big volume. We didn't get that. But I do think that there's some good support here around 35, which is, I don't know, 7-8% below where we currently are. And you can see once we do cleanly break out that our price projection is 46, which is about 24% higher than where we're at now. And it's got a 2.8% dividend, which isn't a huge dividend for a REIT, but this is more of a growth REIT. So this is a growth real estate investment trust. And you kind of want to buy these in taxable accounts, at least I do, because you get all the things that a landlord gets. You get depreciation, you get all those things uh, that landlords get owning properties. So let's take a look at. So the reward to risk is probably 3 or 4 to 1. So it's very favorable. And I don't think there's a lot of hot money in here yet. We want to get into places before the hot money gets there so they can help push those things up for us. So let's look at the point and figure chart, which is a less subjective chart than the one I just showed you that I draw. And this is just a pure supply and demand chart. The X's mean that prices are going up, and the O's mean that prices are going down. And the blue line suggests we have a bullish trend line. So, which is an added plus. It means the trend is up. It's held support on some of these tests. and we like that. We also have a higher column of X's than we did the last one. And so that's given us a bullish price projection of 52. So on my chart, I have 46. On the point and figure chart, it has 52. I don't etch those in stones. It's just I want to see them in the same area, and it'll give me an idea of where uh, landing area for the stock where I would start to unload some of my positions. So that's American Homes and Rent. And I also have more of an income oriented idea. And this is the National Retail Properties. I believe they're out of California, but they have properties all over the country. And I remember when this went public, it had to have been at least 20 years ago. And uh, so, they've been around for a while. They are triple net lease properties. So they build a box and then the tenant pays all their bills. They pay the taxes, they pay the electric bills, they pay for repairs, and these people just collect the rent. And it's really retail uh, things that you see all over the country. I believe they're standalone only, but I'm not gonna. I wouldn't. You should do your own research on that. But some of their tenants are Dollar Tree, Starbucks, Walgreens, Popeyes. There's a huge list of tenants, so they're well diversified with their tenant list, and they've been around a while. So this is more of a yield play, and this is a long-term chart. I just want to show you that, at times this has done extremely well. It's been more like a growth REIT. And I think part of it is that they can also pay a good dividend, so it's good for income and growth-oriented investors. And you can see since 2000, the end of 2009, 2019, it's kind of consolidated sideways after a big drop. So, so I feel like again the hot money is out, uh, and here we are going sideways. So let's take a closer look at this consolidation. Oops. Oh, here we are. And so you can see this has been going back to 2021. Every time it gets up to this level, it kind of dips and it comes back to that level. But again, we're getting wound tighter and tighter here. And um, and we have a potential head and shoulders pattern with the left shoulder, the bottom of the head, the right shoulder, and the neckline right here, right where prices are. So if we get a weekly close up above that, that will put this in play, and we'll have our stop down at 40, and our price projection based on this would be 52, or about 24% potential upside plus a 5.37% dividend yield. I believe the next dividend is paid quarterly and it pays at the end of July. And so I like that. Now, this inverse head and shoulders pattern has some issues. One is you want to see the left shoulder have bigger volume. You want to see the head then having lesser volume. And then you want the right shoulder to have lesser volume. So we don't really have that because the left shoulder was never really bigger than the volume on the head or the right shoulder. So it's just a nuance. It's something I wanted to point out, that I'm not just drawing inverse head and shoulders patterns and not knowing that it's not the perfect pattern, but very seldom do you get those. So anyway, I do like this. We have a much higher price projection. I think the downside is limited, or at least we will be out of it with a weekly close below 40. And let's take a look at the point and figure chart. And here we got a new bullish trend line, which I really like. And we just got a higher column of X's. And so our price projection based on the point and figure chart is 51. And that is good when they both point in the same direction and they both have uh, the same landing area for the potential upside of the stock. So I think this is a really good total return uh, suggestion for an income, but also somebody that wants to keep up with inflation, maybe a retired person, maybe any person, somebody that needs some real estate exposure and they don't want the headache of actually owning a property. So thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. I hope you had a great 4th of July weekend. I did, and good trading tomorrow. Please like and subscribe. Thank you.